Well, the next round of coronavirus stimulus is set to be approved in the House on Thursday after the Senate cleared the bill on Tuesday. That legislation includes $310 billion of funding for the Paycheck Protection Program, which ran out of money officially last week. I do now want to bring in PwC Partner Mitch Roschelle for more on the latest stimulus. Thanks so much for joining us today, Mitch.
Thanks for having me.
As of last Thursday, the SBA did officially shut down applications for loans under the Paycheck Protection Program. How important is this new round of funding, and do you think that we could possibly see the need for a third round in the future?
Yeah, I'll take the questions in the order you asked them. I think it's vital. Just remember what this is. These are helping small businesses, and there are 30 million small businesses, Greta, in this country that employ 60 million people. So it's helping those very small businesses continue to keep employees on their payroll so they can continue to pay them, to keep those people off of the unemployment lines. So it's vital. What happened is the program was so popular, it was oversubscribed. And right now what we're doing is we're allowing all of those would-be borrowers who are in the pipeline to get the loans, many of which have already been approved but can't be funded.
The CARES Act also allows homeowners to suspend their mortgage payments for up to a year. That's one of the relief portions of that bill. But sending a loan into forbearance does have some trickle-down effects for mortgage companies. Today, the Federal Housing Finance Agency did loosen some regulations, allowing loans that are in forbearance to be purchased by Fannie Mae, Freddie Mac. They previously weren't allowed to be. How does this move align with previous measures taken by the Federal Reserve, and how does it help support the economy overall?
So the housing market is obviously vital to the economy, but if you look at all the moves that the Fed, working in concert with the Treasury and Congress, has made, they're really trying to create liquidity in the capital markets. Because right now we have a global health crisis, which right now is not a financial crisis, but it could create one if we cut off credit from flowing. So credit is sort of the lubricant that keeps the economy going, and the fear would be that lenders would be reluctant to make loans because they're worried about credit risk. So what we're doing is we're solving some of that credit risk problem. If you have a borrower who's not paying, that trickles all the way through the banking system. So the FHFA and Freddie Mac and Fannie Mae are stepping in and potentially purchasing those loans to keep credit flowing in the housing market, to keep that element of our economy moving.
Calls to reopen the economy are, of course, growing as unemployment does continue to surge. We get the next round of weekly jobless claims tomorrow morning. Analysts expecting 4 million more. We were already at a total of more than 22 million last week. How long do you think it will possibly take for the labor market to recover once this is all over?
That's the 20-something trillion dollar question, that 20-something trillion being how big our economy is. So it's going to be a challenge. I think we're going to continue to see growth in jobless claims. I think the stalling of the Paycheck Protection Program certainly didn't help that. And actually businesses not knowing when they can sort of reopen is leading businesses who are running out of cash, that were trying to keep employees on the books but didn't have the cash reserves to continue to do it. We're starting to see more employees sort of hitting unemployment. I think just like we see the curve flattening on COVID-19 cases, I'd really love to see the curve flattening and sort of going downward, meaning companies are either not laying off incremental workers or beginning to hire some of them back. So I think that's probably more of a May story than it is an April story, but that's what we're all hoping for.
Quickly back to the PPP, as we're adding that funding under that bill that was passed by the Senate, set to be approved by the House tomorrow. That addition of funding, of course, allows the SBA to start taking those applications again. How quickly, though, could that run out of funding again? And what would be the next step if we're facing this kind of situation again in, say, 2 or 3 weeks?
It's not, Greta, out of the realm of possibility that we'll see it run out again. And here's an important point. So I mentioned that there were 30 million small businesses. 10 million of them, or a third of them, are actually folks who are self-employed. And the folks who are self-employed didn't even get the ability to file an application until April 10th. So I think what we're going to see is those 10 million folks who are self-employed, many of them sort of showing up and getting their applications through the process. So we could go through that $310 billion quite quickly, and I think Congress would have to at that point step in. But hopefully they get ahead of it and move quicker than they did this time, because every second counts if you're a small business and trying to figure out where you're going to get the means to pay your employees.
All right, Mitch Roschelle joining us to talk about the efforts to support the U.S. economy amid the coronavirus outbreak. Thanks so much for coming on the show today.
Thanks for having me.
Want to see more videos like this? Click on the link below and subscribe to One America News on YouTube, and call your cable provider and kindly demand that One America News is added to your lineup. Call and subscribe today.